The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, folks, to another wonderful edition of the Power Trading Hour with me, your wonderful host, David White. And what do we got going on out here today? Well, a lot of action in the morning. We got down to, 1635, 53 on the S&P cash. We've got a lot of volume today, 2.6 billion shares starting the show, which means we're probably going to get close to, on a normal day, somewhere around, 4.8, 4.9 billion shares on the consolidated New York Stock Exchange tape. I suspect that we're going to see the next 2 hours of a very light volume as traders escape to the Hamptons from Wall Street, and the rest of the United States gets ready to cook hamburgers and hot dogs and forget about everything in the markets. We've had a lot of action out here. Tried to go positive earlier in the day after opening up rather strongly lower. Of course, bulls out here have been rewarded every time that they have bought since Christmas, and I expected none less than them coming right back and trying to buy everything out underneath the sun. Plus, we have some stocks that have a huge institutional push for a variety of reasons, but some of it's IPOs, some of it's other stuff, and they don't want to give that out. We've got, we'll talk a little bit more about that today. This is May 23rd. In 1934, notorious criminals Bonnie Parker and Clyde Barrow are shot to death by the Texas and Louisiana State Police while driving a stolen car in Louisiana. Of course, later made into a big film that really started the big shootout scenes. But even in their own day, they were kind of the Robin Hoods for bank excess, not too different than we've had the last few years. But in 1934, pretty much the heyday of the, what would you call it, the Great Depression, I guess, is what they call it. But so should it be on this day, May 23rd, 1934. Of course, headlines actually say Bernanke sparks massive sell-off. I would rather say the title is wrong. It should say Bernanke pops the bubble that he created with a massive amount of money he's been throwing around. I think would be a better title. He didn't spark the massive sell-off. He started the massive bubble that just got popped. We'll see in other areas of the market. Of course, China's PMI was down, but the big thing last night was the Nikkei 225 closed down 7.3% in the session and saw it rise 2% in earlier trades, only to reverse, very much like our own markets. Again, they're going to try to probably push this thing up. I suspect that Bernanke's let a little money loose out here this morning. We're only down 3 points on the S&P now, but very light volume, probably, like I said, starting about now and going into Friday's close. I suspect that tomorrow we'll be closing somewhere around this 1645 to 1650 level. I don't expect a lot of movement between now and then. The real thing to worry about is a very bad couple of days in Japan. This could get extremely ugly, extremely quick. I'm sure that Bernanke shoved another $1 trillion over to the Japanese, and why we saw a little bit of pressure on the dollar. In fact, it is down today off 72 cents. So pretty wild movements, at least in the dollar index. But this thing looks like it's ready to break loose, and probably Bernanke's not going to have a lot to say when this thing really starts to move. He can be effective at the margins, but it's going to be very difficult for him to be the market over time. Eventually, it will grow big enough and whomp him. But what do we have right now? Just a lot of market data from over the entire world shows that we are not gaining momentum or losing it. We saw the numbers out of Europe. In fact, we got a bounce here just because the Kansas City numbers looked good today at 10, which kind of turned the market around a little bit. Everybody was probably getting way too short, way too fast, expecting the kind of money that we got yesterday, again today, and unfortunately, my brethren in the short camp are always the weakest hands. They are always going for the fastest money, and not very good at sitting on their hands and letting them play out. So not surprised to see a rally attempt, and also a lot of people picking up short positions going into a weekend. But again, I just don't see a lot of movement here. I think they're going to try to steady this market at least for the next day or so. When we come back Tuesday, because, of course, we are closed Monday, the market may have yet another huge move in it because, of course, basically Asia is not closed on Monday. So be wary of a huge movement out there. I suspect in the next few days, Bernanke is going to be throwing our money around the world, trying to get everybody to calm down. He has popped the bubble with the idea that he's going to quit pushing, and part of this is jawboning the market down. He has made the bulls feel like they're invulnerable. The market can only go up, and, of course, what do you get when you do that? You get a bubble, which we certainly had, which Japan certainly has, and he's not dumb, but he's like every other economist in the world. They're always late to the party. They're late to get started, and they're late to quit. And I think he was probably about 100 S&P points late on the whole thing of slowing the bulls down. We are way, way extended, at least in compared to earnings, especially in the S&P 500 stocks, where we only had about 38% of them actually hit their revenue numbers in this last earnings cycle. That means that 62% of them did not. That's not kind of data points that make me think this market is going to the moon, nor the numbers that we got out of Europe today. All of the numbers were below 50% on growth, which means that the economies are continuing to shrink. They're just not continuing to shrink fast, just slowly. So we've got this slow meltdown. Of course, Germany is the only one doing anything good. They are below 50%. Of course, the weakest country out here that looks like is fading the fast right now is France. And they've got both political and economic issues with a lot of recent immigrants causing trouble, let me put it that way. So what else do we have going on out here today? The Keystone Pipeline bill passed in the House. They are trying to actually bypass the president, send it to the Senate, where it will probably die, but at least they are on the record. Of course, we've got a lot of oil coming out of the oil sands in Canada. Right now it is being moved on railroads by one of the president's biggest contributors, William Buffett. Of course, he owns huge amounts of these railroad cars. And the question is, how can anybody be impartial in this? I tell you that I will be impartial. It's going to save us probably a nickel a gallon on gasoline if we go to pipelines. The problems with environmental damage are 1/10 in pipelines what they are in rail cars. The amount of rail car accidents dwarf anything in pipelines. We have 12 million miles of pipelines in the United States. When is the last time you heard a lot of these cities being evacuated because a pipeline bust? Because it doesn't. They run them outside of the city. They don't run them through downtown. Of course, railroad cars by their own need to go by major cities. And again, there's a lot of areas that do not have rails that do have oil that they want to put these pipeline feeders in up in Canada. So they're not going to be making rail cars just to move it, 500 miles, just then to put it into a pipeline. So it makes a lot more sense just to go ahead, do the pipeline. It's more economical. It's going to save us money. And, yes, I know it's not going to make Buffett more money, but it is basically come to two different sides, and it's all about, as far as I can tell, money on one side, people wanting more and less expensive gasoline and oil, and on the other side, people wanting to use rail cars and push that side. Nickel's probably not a big deal, but when everybody's paying a nickel, I'm just going to call it the Buffett tax, which is the tax on every one of us because Buffett wants to make money, and he owns every one of those rail cars companies, or not rail car companies, but train companies. And, congratulations, he saw it coming. Is he entitled to that nickel of additional profit because he can kill the Keystone Pipeline? I don't think so. The people against this are, they're Luddites, I'll just call them that. They are anti-progress. I'm going to just also say that. I don't think that there's any kind of leg they have to stand on, either historically or economically or environmentally. That all goes to pipelines. They've been incredibly effective over 100 years. So that's pretty much the news out here. Wanted to get into some other stuff going on in the market. Let's see what else we have going on. And go ahead and pull up the charts here pretty quick. Wanted to look at some other stuff. Gold's at $23. Kind of interesting on the dollar coming down. At least there seemed to be kind of similar reaction between those today. Silver up 6 cents. Platinum off $6. What else do we have up here? Crude's off. West Texas crude's off 74 cents. So what else do we have? Yeah, that's pretty much it. Still pushing up a little higher, I guess, since we started. I've got 1652 on the S&P cash. My guess is they're going to try to push this thing to 1655 for the close today. Again, 2.7 billion shares, so a lot of shares trading hands. But we're not rocketing up anything here soon. Anyway, we're going to a break. We'll be right back. We'll be talking about FIO. We had a request via email to talk about that. We'll be going right to it.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Are we back yet? Well, I guess we are. And what do we got going on here? Check out here. I guess we're on. I can't hear anything on the backside. So we'll be looking at Fusion.io. That is, who was it? Larry asked me via email. Of course, if you want me to cover one of the stocks via email, you certainly can. Just email me at path@tfnn.com. You can also call us at 877-927-6648. We'll be glad to answer your question on air. Normally, we like you to call those. We could ask some other questions. A lot of times, don't really know what people are fishing for on the answer. Fusion.io, of course, is the big IPO last year, or a little longer than that, isn't it? Let's see what we have, I guess a year and a half, 2 years going on. And it was, of course, the darling of Wall Street. It was a great technology. I disliked that it was one of the sliver deals that I've railed about so much, which is, 45 million shares. And, of course, they opened trading with it with only 5 million in the float. Pretty easy to do it. And then, of course, they keep adding shares to the float. They push these things up, and then they let everybody have just as many shares as they can stand as they exit stage left. This is the accumulation distribution model to get IPOs out the door. The purpose of Wall Street is not to make you rich. It is to push paper. And this is an excellent example of it. I never liked the IPO from day one for a variety of reasons, but mostly the expectation of what they could make was far in excess of what the company looked like it could deliver up into the next 5 years. At $32, horribly overpriced. At $13, we're going to take a look at it today. We certainly have a chart that looks fairly good. We look at the last few major lows, which are February 25th at $15.10 with 3.2 million shares. If you go below it, you have an automatic rally. It goes back up to $20. They have earnings and get blown apart down on major volume yet again. That was down on 46 million shares on May 8th. And, of course, we're coming back in to test this. And my guess is that you're going to need, before you buy this, some time for it to consolidate. The real danger in this stock is it goes below $10, and funds that have it have to dump it. Of course, they're going to get about 90 days to do so. So as long as it doesn't stay below $10 for that time, my guess, though, looking at the chart here, is that we have a good chance of one more gap down. Normally, when you look at these kinds of stocks, you'll get what is known as a three-gap play. The first gap was between 27.50 and 25.75, something like that, back on October 25th. We've had our second huge major gap down here, and I think we have one more gap down coming that could be a buck and a half, and that would probably wash out just about every long in this. But either way, you're going to need some level of consolidation. It's not just going to hit here. Could you have a 4-day, 5-day trade out of it? I think the answer is yes. Normally when these stocks get into this danger zone, kind of the same thing as being in the 10-yard line on a football in a football game. If you're within 10 yards, of course, everybody starts playing prevent defense on you. And the idea here is whether or not we're going to start seeing companies actually come in here, hedge funds, and start buying this up. Don't have a lot of selling yet, but we have no sign of strength. Consolidation is the likely answer. So while the chart looks good, I was going to say just hold your breath for a little while. I think that you have a better time to buy this thing coming up. It doesn't look bad. If we got some kind of real movement in this market, which I don't suspect until at least Wednesday of next week, I just can't see buying it today. And again, like I said, I would worry that we come back Sunday night and find Japan down another 5 to 10%. We'll be back in just a minute. Give me a call at 877-927-6648 or email me at pat@tfnn.com.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we look at this market, of course, not a lot of movement out here. We've got, is this right? Yeah. We've got the S&P off 6 points now. I suspect we're going to have a low volume move into the close, and that is going to continue, like I said, maybe 1645 tomorrow, 1640, something like that. Maybe we go down and test that 1635 level for the close tomorrow, all on light volume, and that's going to set up a long weekend for everyone, as, of course, we're not open on Monday in the United States. But, of course, the Pacific Rim is going to be trading. We've already had one flash crash in Japan. The question is what will happen tonight. I'm assuming that the money that Ben Bernanke shipped over there overnight to reinforce them probably did a little bit of good. The question is that was such a ballistic move in Japan that normally when these bubbles burst like they did in Japan, you get a 7, 8, 10% move. That is just the beginning of how far these things can fall. And I'd be very wary. If I wasn't short, I would certainly think that I would take the weekend off and probably limit my long plays to an hour or two until we get through and into Tuesday. And we see just what the effect of Japan's trading over the last few days, and especially a day where we're closed, and what that brings. I have no doubt that this little rally this morning is a little bit of money probably coming from the Fed. What do we have with Ben Bernanke? He needs to let the air out of the balloon, but not too fast. Of course, he caused that balloon to be pumped up to the point where it just about was ready to bust, and he would take responsibility for that. He didn't want to be the guy that killed the market, but at the same time, he has to let some steam out of this. I think a lot of people, when he was giving his testimony, knew exactly when he was talking about the risks of additional QE were, and it's exactly this. It's the exact same problem that Japan had. That is a bubble, and when these bubbles burst, 10% moves are not anything surprising, and I would not be surprised to see a 500 or 750-point move in the Dow next week. And that may be 300 points down one day and 350 points up the next day and 500 points down the next day. We could get in some extremely wild trading. Fast markets are looking like they could happen. This is what happens when you do get into bubble territories. Everything above 1575 on the S&P cash, in my opinion, was a Bernanke bubble, and the belief that no matter what happened, Bernanke would have the longs back. And I think yesterday's testimony meant when he would not rule out bringing back some of the QE money in even the next meeting made bears or bulls caution and temper their rabid optimism. Again, normally the problem with these bubbles is all the money comes back in 1 or 2 days. We've had kind of a decent move out here, a little move lower, and I think, again, this is the Fed covering their rear ends. But a lot of times you cannot control these avalanches when they do occur. And, of course, basically he did everything to set that avalanche up and let it run far longer than he should have. This money should probably be better off going into housing and other things that would have a long-term benefit than putting a bubble in the U.S. stock market and in Japan's, too, because, of course, we've thrown $1 billion out to other banks, and I suspect half of that's in Japan. Anyway, what else do we have here in Fusion.io? We were just talking about consolidation. And normally what you want to look at is at least half the time that it took to go down. And so if this thing started to hit its peak on October 8th, we're talking about Fusion.io again, we've got, about 4 or 5 months? So you're probably talking about 8 weeks down here and start watching for big funds trying to snap this up and buy it on the cheap. A lot of times you'll see these things a very narrow trading range over 7, 8, 10 days. And, let's say this thing trades within 20 cents of each other and it's flat, and then volume kind of starts tapering off. Good indications that the funds are back in and ready to start buying Fusion.io down here at the lows. And I think you could probably get this thing. I think probably the worst is over. I just can't see being a hero too early in this one. Let's go ahead and look at some of the other stocks that were moving. Wanted to see how some of these things are doing. We'll go through a few of them here. I haven't had a chance to check them on today's scan. Just looking at some of these out here. Active Networks, Accurate, American Financial, Creative Health, Healthcare Services, Ashford Hospitality Trust. Now, let's see. Let's do a few Gartleys here. The first one Tom was talking about last night was been picked up for a few days. CL. And that was Oracle. It had a little bounce out here today. He was saying it was a perfect Tiger Gartley. I just like the pure symmetry in this. The C to D leg was a little long. You like to have, in fact, I had an email question about a particular Gartley. In fact, two of them yesterday. One, the C point was lower than the A point, so therefore it's not a Gartley. The price point, even at the most aggressive definition of a Gartley, the C point in your Gartley pattern cannot be lower than your A point in a bearish Gartley, and of course, oppositely, the C point can't be higher than the A point in a bullish Gartley. So, of course, you've got to have, it's basically a lower high, a lower low, and then a retracement from the original X to A point at basically a 7.81% retracement. And this one got within about, 2 cents of its B target, which makes it almost a perfect Gartley. It just about finished actually filling the gap it had down on huge volume. You still got the A point down here at $31.16. It looks very much like a good chance that this thing could get it back at least in that $31.16 range. If we remember earnings, Oracle was the first one coming out saying that there was considerable weakness in Europe and starting now in China. And, of course, they came down that day on earnings very, very hard, and, of course, sold off for the next 2 days after that. Volume still extremely in that 31 million share range, but I don't think this thing would have a problem. It's in the low 34s now, making its way back to that 31. I probably would never short Oracle. It's one of the best managed companies ever in technology and the best CEO. But it is one of the, it is still subject to the whims and weather of the economic turmoil. Trying to think what else we had out here that I wanted to take a look at. We'll get a few of these things up if I can find them. Oh, I know what I wanted to look at. If I can actually get it up here. Finance. Give me just a second here. We've got to do some house cleaning to actually find. There we go. NASDAQ. Beep, 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 beep. Come on. We'll get out of these Gartleys and out of that one. Okay. So what else we have here? Okay. Price change. There we go. We've got a few that are moving out here fairly strong today. GMCR, Green Mountain Coffee Roasters. This thing came off of $80 fairly hard, making a little kind of hanging man candle out here. Did run very well off of earnings and bounced up on 26 million shares on the 9th of May out here. I would love to see this thing test the 8170 again on lighter volume. Earnings were not that good. It was just a stock that was about 35% short. I thought it was going to roll over, and actually was short up to earnings, but sold just before they came out. What else do we have out here? MCP off 2%. Wynn, I haven't looked at that for a while. WYNN. Wynn Resorts, of course, that one is a play directly on China and Japan, off 2.5% today. This thing had just run smack dab into a long-term gap. So let's take just a little better look at that. Let's see and find where that gap comes. That's one of the nice features of timing the trade. The art of timing the trade charts, and that is that even if gaps exist over on the left-hand side of the chart, even if they're a few months earlier than what you see, they will show all the way off to the left. And this is exactly what this one did. Wynn Resorts came down on very heavy volume, about 4.5 million shares, and formed a gap all the way back in, when was that, 9/22 of 2011, and that's been its long-term resistance level for a while. Got back into that with 1.3 million shares. So at 4 million and 1.3 tells us just about everything we need to know about that, and reversed. And I could see if China continues to be the house of cards that I think it is, we could see a lot more movement in these companies that especially have a huge exposure in the Japanese market. Yahoo, probably not so much a comment, but I have had some questions about Yahoo buying Tumblr. We'll probably talk about it at length tomorrow night in the Tech Insider Hour on the Tom O'Brien Show. But am I thinking much of it? And the answer is no. The question I have, which they've dodged and politely and polite company have not talked about, is known as the porn problem with Tumblr. And that is about half of all their sites and picture blogs are all porn. They've tried to move that back a little bit, and I probably should have been a little bit, if there was any way for me to make some money, I probably would have looked at it. But there have been some articles about Tumblr trying to clean that up over the last couple of months. I suspected it was because they were going to be bought. If they were, of course, a public company, would have been a lot easier, but they were private. So not a reason or a way to actually make any decent money out of this company. Yahoo, is there a lot there? It's like a lot of these companies. They came in, slashed all the big losing parts of it so they don't go out of business instantly. A lot of the funds in this are more than willing to pump the stock up and, again, push it out on the public one more time. There's just not that much there to Yahoo and how they make money. They are trying. The problem is you're just not going to replace a huge business with another huge business. You've got to push out a lot of small businesses, and those take time. Wall Street almost never gives you that time. So I suspect that on the next real weakness in Yahoo, we see this thing back down in the $15 range again. Qualcomm's off about 2%. Let's see how this thing's been trading. Of course, we're looking at Apple also out there, and we'll look at that in a minute. Let's just look at a shorter time frame of Qualcomm here. This thing's been rolling off, had a very high volume high at 68.50. I kind of vaguely remember it being $69. That's why we have charts, so we can go back to them. Anyway, $16, 16 million shares up here at the high, so you do have a high volume high. This would be one of the ones that you want to be chalking down if you're thinking about making another run for the top. Exactly what we're looking for, which is a high volume move. Slash leg energy did kind of pick up, but was not strong enough. You certainly got saw a nice signal out on May 17th when it busted about 20 cents higher than the previous high out on April 24th at 17 million shares. You only had 13 million shares. This thing is pulled right back into the trading range. I suspect that this thing, if the market is pulling back, that your next buy opportunity would be in the probably around the level of this gap, which is going to be just above $59.50. You should find some outrageous support at that level. It gapped up on huge volume and probably going to slowly make its way back into that level. But that would probably be the best and only place that your risk-reward would come out and give you a shot for that high at 68.50 back again. Let's take a quick look at some of the other stocks out here. MU's up strong, 50 cents. I missed this one entirely. In fact, I knew the story and missed it, so it'll always be one of these fish that got away. We will be back in a minute to talk about NU, and you still have time to give me a call at 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, we've been talking about Micron technology just before the break. This one had a nice move out here for a lower opening. Pretty much almost a bearish engulfing of yesterday's move. Of course, they've almost become a monopoly in memory manufacturers since they bought their biggest competitor, Apedia, that went out of business in Japan. I saw it. I just didn't put everything together back when it was about $6. Especially with as bad as PCs were doing, could you really think Micron was going to really move? And the answer was yes, because they basically have doubled the prices for a lot of the memory that they have been manufacturing out here. Still have not gone positive on the day, I don't think. Is that right? 1655? Yeah. But we are close. 1653 on the S&P cash. We are cracking 3 billion shares. So we're probably going to see a little bit more volume out of this. I think the most important thing is probably going to be the last 10 minutes of the day as we find a lot of people leaving the market. It is almost unanimous for the big heads of Wall Street to leave today. What they do is they have the B team members. Those B team members will be told to do one thing. Do not let the market move up or down until we come back. We are going to the Hamptons. We are not coming back until Tuesday afternoon. Do not let this market move. So normally we start seeing very light volume starting about the beginning of the show. Actually, we've had a little bit more volume than usual, but I suspect those orders will be coming down. So probably a very light, unmoving day unless Japan actually has yet another flash crash in its system to come out of there. But we've had big moves in this market, and I think probably going to take a little while. Bulls still thinking that they'll be able to always buy every dip and make money. One day that will be wrong, and unfortunately, most of them in past moves like this have given all their money back. So just be very careful. Have a very proper money management, even if you are a bullish out here, and probably work out just fine. I think we're headed back down to 1575 on the S&P cash over the next few weeks, and I don't think that it's going to take 1 or 2 or 3 trading days in that time that we have additional days like we had yesterday. It's just going to be these huge moves down. Bulls are going to come back and buy these things, and they're going to wake up the next day with a huge gap down. That's just the way these markets tend to do, especially in bubbles. They tend to lull you to sleep even as they pull back, and that's it. On the way up, we had everything that you wanted. You accept volume, and that's why I think that the market is like a house built on sand. Yes, it's a beautiful house. The question is you just don't want to stay there too long, and you need to find the bigger fool to buy one that is built on sand. The first big storm, they tend to get blown away fairly quickly. So as we finish the day, I'll be in studio tomorrow and talking in the Tom O'Brien Show about technology. Hope everybody has a safe and wonderful weekend. If you're leaving early, we'll be here every trading day. And, of course, we'll have a Monday off. I know a lot of people won't even be showing up into the markets tomorrow. And I just wanted to make sure that I caught you before you left for the big weekend. But, and we're still off 1.5 from going at least neutral on the day, which is pretty good movement from starting at 1635. Anyway, just catch us tomorrow if you are going to be trading at the same bat channel, same bat time, channel 14 on Tiger TV for the Power Trading Hour. See you tomorrow.